Seems like the Fed decision is now in. Atlantic Fed boss warns U.S. progress on inflation is likely to slow. This is a big deal because if inflation is about to be slowing down, guess what the Feds are doing? They're not going to be cutting rates as fast as you're thinking. Now, with the real estate market already in tatters right now, with several of U.S.'s biggest cities taking huge beatings, I mean, the real estate market just is not doing so well, right? If you look at some of these properties, they are unsellable. Nobody wants to buy these properties, and these properties, especially the very expensive ones, have been on the market for a very, very long time. And then you head up towards the commercial sector, it is trash, guys. You got whole entire skyscrapers just having a starting bid of a measly $1 million. You know, commercial real estate was pretty hot before the pandemic, but after the whole entire hybrid work situation, and we're already having high rates for over a year now, a lot of these properties have truly become junk properties. Oh, by the way, like buildings like these, they have been on LoopNet for like almost a year now, and people still don't want to buy it. And whole entire buildings like these, right, near the Loop area, great location, this building could probably sell for maybe like $7 to $8 million max. I'm not even joking when I say it's that cheap for a skyscraper in the middle of downtown Chicago. And it's not the first, right? Already other buildings with like 200, 300,000 square feet, 12 stories, sells for like $4 million, which is crazy and scary cheap. And the Feds are like, inflation isn't really going down as fast as they'd like. So if you don't cut rates right now, you got more of these corporations going bankrupt. We already have Blackstone defaulting on their New York City office. The loan is up for sale at a 50% discount if you're interested. And this is a little over $300 million of mortgage they've defaulted. Now, you could actually buy the building. Very nice. The 26-story Art Deco style, 55th and 56th Street. I checked the location. It's great. The building looks fantastic if you like the pre-war style. And 50% off. Take it or leave it. Interest rates are so incredibly high that most of the buyers with money are just not going into the market. And guess what's going on with the interest rates? They're so high that everyone's just buying bonds, treasuries, and CDs. Why would I spend like 150 mil on this building when I could just buy like a CD, get a guarantee like 5%? It's so much simpler. I make so much more money. And it's probably a lot safer than a crazy commercial real estate deal. And this is what's causing many of these buildings to collapse in value. And I'm not joking when I tell you guys, you go to the Bay Area, it's negative 50 to negative 80% off. Chicago, if it's not negative 70% off, nobody's buying. Go check out some of the transactions of these big cities. And it's actually very scary. It's getting so bad to the point that we could be seeing a rate cut in the third quarter. I mean, everyone was kind of expecting like March, guys. Third quarter just pretty much takes the whole market down. And the Feds aren't joking around because the CPI numbers are really not that great. CPI went from 3.1 to 3.4 in a single month. Inflation is going up. Now, their goal is to get the CPI number down to 2.0. And it seems like it's taken them a very long time. Another thing that you need to consider with the whole inflation number is the wholesale numbers. That's okay because apparently resale goods and food are getting a little bit cheaper. Now, oil prices are kind of shaky as well. The whole entire Houthis and Red Sea situation that could be affecting oil prices. If it gets more expensive, we could be seeing the whole entire situation, the inflation market, go up as well. And the U.S. real estate market remains a risk despite some investors hoping for a soft landing. Now, the economy seems okay. Unemployment is low, though high-paying jobs are hard to find. And generally, high-paying jobs are going to be the jobs that you could actually use it to afford these very expensive homes. You would check out some of these homes in like Manhattan, for example. Many of these units aren't selling because rates are still very high. And many of these guys are trying to sell their units, but there's not enough buyers on the market, which is causing a lot of panic on the market because a lot of people hold these units and they don't hold one, they hold multiple of these units. Like look at this one. Multiple price cuts with the most recent price cut being 50 G's, and there still isn't a buyer on the market. And the unit looks pretty decent, good views. The overall building looks pretty nice. But yeah, not a lot of people are buying these, which kind of sucks. Let's see what happens. Right now, real estate seems to be going through a massive bubble spree, with developers still making office buildings, which is honestly pretty frightening when you have developers still borrowing $500 million to make office buildings, which are probably one of the worst investments right now. What do you guys think about this so far? The Feds seems to be going all out. They don't really care about the real estate market right now. They just want to get inflation low.